Hello to everyone, my name is Gira Horat and welcome to our new analysis Surfing Daily at Waves, which is sponsored by Orbex. So if you're not our member yet, make sure to check our website wavetraders.com. You can get access for 14 days with a coupon code TRIAL. Okay, so whenever you register, follow the steps, put in this code at the checkout and you will have 14 days access to Forex and crypto. And also in Forex, as you know, we cover S&P 500, crude oil, gold, and other markets which are obviously important for the overall direction. So we will take a look at firstly at the S&P 500. So, as you know, the sentiment has changed after the recent sell-off of the US dollar, actually last week, when the ECB raised by 75 basis points. That's when actually US dollar came down a little bit on speculations actually that now the other central banks, ECB in particular, will try to follow the Fed. However, the US CPI figures yesterday came worse than expected, so it looks like that speculators are still believe that Fed will stay hawkish, that maybe they will have to be even more aggressive before the inflation can come much lower. So with this being said, as you know, hawkish expectations means higher US yields. Obviously, the US yields are trading on 10-year close to 3.5%. And at the same time, obviously, the US dollar has almost erased all of the losses that we have seen before the release. At the same time, the most important for me at this stage is probably the S&P 500 or the US stock market, if you want. I'm still thinking that we could potentially see lower prices while the market is trading below this trend line's resistance. We failed up there to break this trend line when the VIX, which is here, has been trading actually at the lower side of this cycle. So whenever VIX fear index is very low, it means that there's a lot of optimism in the market, and if this moves into some extremes, we know that new cycle can occur. So I'm still thinking that we are now in the different phase, that we are now going from optimism to pessimism, meaning that fear could increase, especially after yesterday's drop on stock market. So what I'm seeing here is that there is room for more upside till we reach the upper side of this cycle, or in other words, till we reach the extreme of pessimism. So watch out this trend line as well. This for now still holds, but I think that if that sooner or later will be broken, and this could then cause much more weakness here in lower into wave C. Now if you look also into another alternate interpretation, there's also a triangle. It's an ABCDE pattern, but quite early to call this as a triangle because we are still just in wave C, and this can, as you know, can be impulsive, can have a multi-wave structure, can be in three waves if it's in a triangle. So it's a little bit early, but what I want to highlight here, that even this one suggests that even if it's triangle, there's room for more weakness until the drop is made by three waves, because each leg in a triangle should be made by three waves. So that would be minimum expectations for a drop towards 3,750, around there, okay, where we also had some minor swing lows back from July. So at least in the short term, I think that stocks will stay bearish. As I said, this trend line, broken one, could provide much more weakness. At the same time, obviously, US dollar will stay king. If from any reason we're just chopping around here, then important resistance obviously still remains around the 61.8%, but definitely we should, for a bearish trend or cycles to stay in play, we should definitely stay below 4,325. So with that in mind, with stocks in risk-off mode, looking at the euro dollar here, it noticed that actually price, looking at the technical chart here, price failed to break this trend line. It's in place since start of the year. You also have, let me check this, I believe that's 50 day moving average, and it looks like that as long as we are below this level, the trend technically actually remains to the downside. However, there are some divergences, as you can see here. unfolding over the last few weeks. So it can suggest that still we are in late stages of this weakness, but unfortunately we are not seeing this low happening just yet. Looking at this 4-hour time frame, either we finished fifth wave here and we are going back to the highs of the week, or maybe we are going to see another low. I would not be surprised to see another retest of the lows, because as I said, stocks are not looking good. US yields are still holding up. So I think that as long as we are below this black trend line that I showed you on the earlier chart, and obviously this red trend line, which can also represent the upper side of this wedge pattern, as long as this one holds, and 102 in particular, I think that we should favor the odds towards the bearish sequence here. However, I'm not putting any trade on this one. I still think that somehow the ECB or European Union in general will try to come out with some new solutions, regulations, which we can see on a daily basis coming out from the members regarding the energy crisis, and also the hawks are still there. So I think that there is still a chance that euro somehow can surprise. That's why I don't want to touch it. Now let's take a look also on Aussie dollar. Now I think we will get some employment data, if not wrong, in the next 24 hours from Australia. So we'll see how this will play out. Now, generally speaking, looking at this time frame here, the 4-hour, this pattern, notice that actually price is just moving sideways. Okay, yes, we have seen some volatile moves during the last 3-4 months, but actually this looks more like a triangle, okay, more like a consolidation on the way down. So whenever we are seeing retracement against the previous rise more than 90% with this drop, and then you have also something similar on a smaller scale now, well, it means that that bulls are not ready yet, okay, because bears just made too much back. So in my opinion, this is still a consolidation, and that sooner or later, more we test those levels here around 670, I think sooner we will see the breakdown actually. So watch out for potential more weakness. I think this is a triangle in a way B. Of course, this can always become more complex, but since this was a very sharp drop yesterday, so if today somehow we will remain slow, choppy, corrective here on the intraday basis, or even break this wave, this swing low, then I think that weakness is in the cards. However, on a higher time frame charts, I still think that by the end of the year we could potentially see this bottom for a wave B. Now let's take a look on silver. Now silver is doing quite well. It's holding up very good actually compared to what the US dollar is doing. Gold silver ratio also has been moving to the downside, so that's somehow positive for metals. Now looking at the big chart, I'm waiting on this pattern to develop for quite some time now, and we rallied here first in July 20, potentially even with 5 waves. This was completely erased, so I had to adjust the wave count, and now looking for another potential attempt of a 5-wave recovery. I think that sooner or later this 5-wave recovery, the real one, will finally put the lows in place. So what I'm looking at here, what I'm potentially observing, is a new impulse already in progress. However, it's very hard or not recommended to say that lows are in place unless you see a completed 5-wave rise. So for now, that's still potentially a 5-wave ongoing rise, meaning it's incomplete. So especially from an investment perspective, if you think that gold is in a bullish phase now, at least at the starting of this new cycle, well, I suggest to wait on a 5 waves up and then buy a pullback on 3 waves. Because if US dollar, based on current rates and current developments on other markets, if US dollar will stay strong, and let's say we get another sharp drop across the board on the stock markets today or tomorrow, then you can easily see silver falling back towards 1857. Then the bullish interpretation would be invalidation, and therefore it means that silver is not bottoming yet either. So it's really important that you wait on this 5-wave rise first, and then maybe potentially look for a pullbacks. Okay, so watch out for silver here. but as I said earlier, on a longer term, definitely very important and big zone down here. Okay, but just short term, it's quite tricky with all the daily events that we have on the schedule, especially economic ones. Now let's take a look on the euro pound. Now euro pound, to give a quick overview here, still looking at this multi-year support, we are rallying away from it. So even if you ignore the wave counts, we still think that there can be a new cycle to the upside, focusing on this red line to give you the better presentation here. So I think that there is a chance for higher prices. We will see what Bank of England will do there. I think they are ready to raise rates by 50 basis points. I think it's next Thursday. So if we will see how this will play out. There's a recession risk on the table for sure. So maybe pound, it will be actually a battle because of interest rates between ECB and Bank of England. But from an Elliott wave perspective, I still think that this potential double top here could be broken at 87.20. If you look at the smaller time frame, notice that this is still ongoing rise, incomplete in my opinion. That was wave one, wave two, another wave one, wave two that actually belongs to this. I should adjust this. That actually belongs this to extended wave 3. So watch out for a wave 4 setback. Very nice support at 85.70 at the former wave 4. You also had this upper channel of this base channel actually, because we broken out here. So that's usually confirmation that you are in a very strong move, like an impulsive wave 3. So after the pullbacks in wave 4, you could see the same line acting as a support. Okay, it happened here back early in September, and now also maybe going into the next week Bank of England meeting, we could see something similar. Now let's take a look real quick. The final market will be dollar yen. So dollar yen, there's on a daily basis we see a lot of talks from Bank of Japan members regarding this intervention, because weak yen makes imports even worse, so it's not good for their current situation, especially not for inflation. So we'll see how will this play out. But the last time when we were here around 147.48 was back in 1998, when there was an intervention from Bank of Japan. So since we are approaching these levels and there is a lot of talk about the intervention, I would not be surprised if we will see a shifting trend in the next, let's say in the next few months. Definitely not an easy call regarding timing here, because obviously it will also have a lot to do with the US dollar. So we are definitely approaching some big levels here, but looking at the short-term look here, I have it here like a picture. It's also potential still ongoing recovery, ongoing uptrend. I'm tracking potentially triangle now in a wave 4, can be even flat. So the short term, well, it doesn't look like a top in place. On the long term, definitely very big levels up here. Okay, so maybe 148 still going to be retest based on the both outlooks. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.